May profits be upon you. We're going to look at NZDUSD, New Zealand dollar against the US dollar. Let's first take a look at the RT money meter. The RT money meter tracks the rate of change of each individual currency future over a 15-week period. We look at them individually, and I update this every week so we can mix and match the strongest against the weakest. All right, we just want to track their relative strength to each other, or the relative weakness to each other, right? So we can put the strong against the weak. All right, gives the highest probability of good trades, successful trades. Now, US dollar, ranked number one, strongest, 729 last week, 839 this week. That is the rate of change. It is moving up. All right, NZD. New Zealand dollar was minus 1088 last week, ranked at number 8. It's still ranked at number 8, the bottom of the rankings, all right, at minus 1105. It is trending to the downside. The stronger is getting weaker, getting stronger, and the weak is getting weaker. I got to get my life together over here. All right, first, I want to take you to the monthly. I want you to see something very important. All right, price is moving bearishly into this demand zone, which has not been mitigated yet. All right, we came close during the COVID time. March 2020 was when this candle was made, when this wick rejection was made. There's a lot of stop losses down here. This is a lot of people who took this long down here, who bought the dip. All right, and price is coming for those stop losses now. All right. And I want you to look at the nature of the bearish impulse. This was the prior month, all right, September. Look how hard it closed, just bullish, bearish. It just bam, right? And then now look at the new month. We wicked up, didn't even make it to the equilibrium of this trading range, to the midpoint. And we wicked down, barely closing a bullish candle. Let me get rid of this thing here. There you go. Cool. All right. So that's telling us that price is really bearish and probably going to continue to be bearish. Look at the weekly. The weekly candle is the same exact way. Just hardcore, boom, to the downside. All right. And I want you to notice these weekly swings, the swing lows, all right, are being taken out. Boom, 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 boom. 3 months of bearishness. We tried to turn bullish here, and that looked like a big fail. All right, let's go to the daily. And what I want you to see is this top to this bottom. That is the trading range of this leg. All right, this is the midpoint. We didn't even make it up there. All right. Now, when it doesn't make it back like that, sometimes the market does that. It doesn't make a 50% or better retracement. All right. But when it does, I always have my head on a swivel insofar as I'm looking out for signs that it may want to come and get that high and mitigate the zone that is in premium price. Again, premium price is above the 50% of the trading range. Discount is below the 50% of that trading range. All right. You want to take your longs from here. You want to take your shorts from there. Right. And for the highest probability of success. Okay. So let's go to the 4-hour. Again, we're looking at a trading range, right? Oops. And what I'm looking at now is this last, on the 4-hour now, last swing point, swing high, swing low. The low was taken, and I have this as one leg of structure. Got it? And as price comes down in here, you can see that we make some lower lows and lower highs and all. Price takes that lower high out, right? So at this point, with a break and a close above it, we are saying the internal structure of this market, the internal structure is now bullish. All right. And we should be switching to buys, right? And what I want you to always do reflexively is when price breaks those lower highs like that to the upside, that's an internal break of structure or an IBOS. When you see that, as soon as it happens, as soon as you get a break and a close above that, your eyes should be down here because you want to make sure this low holds. All right. Price finally came back down, and the low did hold and led to a higher high. Now, this break, let's keep you tracking here. We broke this high, we broke this high, we broke this high, right? Higher and higher, right? But we didn't get a break and a candle body break and close above that high. So that's telling me about the intent of price. Yeah, we went up here and it looked like it was going to go into premium price, but it turned into a big old liquidity grab, right? That's all. All right. Price grabbed the liquidity, swept liquidity up until this point, and then came back down into the range. All right. Price again tried to break and close, make a new higher high. All right. But all it turned out was a liquidity grab. We could not get a candle body break and close. We did mitigate this zone, and that's what it looks like. All it wanted to do was mitigate. Mitigate it once, mitigate it twice, and prices falling to the bottom of this trading range. Okay, now this is what I want you to do. Keep it in your mind. Keep it in your mind. Be mindful that price could very well come down here, take these lows out. All right, this is the strong internal high, strong internal low here. Strong internal insofar as it caused an IBOS, so it is strong, and it showed its resiliency here. And now again, we're here again. All right, but I think this will fail. Why? Because this is a weak swing low. It could be a strong internal high because it's proven that, right? But it's a weak swing low because all lows in a downtrend, especially a swing structure, swing high, swing low, swing high, swing low, swing high. All right, new swing low. Once we take these low, the lows are targeted because they're weak. All right, it's the highs that are inherently strong. All right, so I know that might sound a little confusing, but this is how you mark where you are in structure. All right, when you take a trade, you want to take it from a place of strength where you have confidence that that low will hold, or that demand zone will hold, or that supply will hold, or the high will hold. You understand? And this is how you mark price. This is how you map it. Okay, so we are in this demand zone right now, right? And we have clear momentum to the downside, and it looks like we're going to target this high. Remember, we are in a demand zone, a higher time frame demand zone. I believe this is a daily, if I'm not mistaken. I believe it's a daily. Might be. No, it's not. It's not a daily. I think it's a weekly. Yeah, we are in the wick demand area, the wick demand of that COVID candle. Okay, so, and we are filling it, as you can see, little by little, we are filling this, filling the wick. All right, and it looks like we're going to take that wick and we're going to mitigate down here where we have a larger zone, a higher time frame zone at 54442. Okay, I think that is the intent of price to go lower. NZD is very weak when compared to the US dollar, and we have FOMC on Wednesday. We have the data for CPI coming out on Thursday. All right, it looks like the outlook is the US dollar will get stronger. All right, and I fear that price will be coming down. All right, now up until Thursday, we may see price react to this zone. All right, and we might see a pullback. All right, we might even see a pullback into the you know, up at the top of this trading range. We may see that. You know, I'm not exactly 100% on that. We may see it. All right, I'm looking out for these things because it makes sense. All right, because once the data comes in, price is going to flush. All right, and the institutions will want to gain a nice zone. I mean, a nice discount on their trades. So look for price to make it up. You know, look for price to drift. If it does, great. If it doesn't, no problem. If a bullish scenario, I don't recommend taking buys. All right. And if you're going to take a buy, make sure you get confirmations down at this zone. Look on the 15-minute, and you want to make sure you get a break of structure and a return to impulse. And you want to make sure your trades are your entries are confirmed. But for sell scenarios, maybe we see price here. All right. Keep an eye on this area. If I can just get it to highlight 0.56999. Okay, look for there or up here because there is a supply chain up here. You know what I mean by supply chain? Links, price comes back and forms another supply as it makes connections. You know, it comes back to a supply and then forms another supply and then comes back, you know, leaves and come back and forms another supply. All right, these are unmitigated zones here. So I'm looking for price. If it does drift up, you know, I would look for a nice banger here, or if it comes up here, I'm looking for a banger here. Each time when it comes up in those areas, I'm looking for 15-minute confirmations to the downside. Just looking for a break of structure and a return to impulse, and I'll take those confirmation entries all the way down. If price moves down from here, all right, I'd wait until this this demand zone is taken out, all right, and I'd wait for price to come back to this area to whatever supply is in the vicinity. I would take a short down to the opposing demand zone down here. Hope there's not too many squigglies, but that's the plan. You got to have a plan, man. You got to have a plan. All right. Keep your mind open to the fact that price may want to come back up into premium and possibly give us a nice trade to the downside. Just keep your mind open to it. All right, because I've been fooled before. Price does all this stuff here and it looks like it's going to come down, and then it does this and finally gives us the pullback that it didn't give us on this one. Got it? All right, I'll see you in the next video. Smash the like button for me if you want to support what I'm doing here and you want to help the channel grow. Smash the like button, leave a comment. That helps the YouTube algorithm. All right. And make sure you subscribe and let a friend know. Hey, there's a guy over here that does some decent work. All right. I will see you in the next video.